And welcome back. You're still watching Closing Bell Southern Africa. And next up, we talk trade finance in Africa. Estimated at the gap is estimated at around $120 billion and forming a crucial lever for socioeconomic development in Africa, where micro, small and medium enterprises employing up to 85% of the workforce face a significant trade finance gap due to stringent banking regulations directing banks more towards government bonds as opposed to the financing of trade for MSMEs. Here to unpack this further is George Wilson, Head of Institutional Trade Finance at Investec. So let's start to just frame this problematic. So we've got a situation where banks, financial institutions can finance the trade of micro, small and medium-sized enterprises. However, due to global banking regulations, they're more inclined to go on and finance or invest in government bonds as opposed to trade finance. Unpack these root causes for us.
Yeah, so it should be your average African bank's absolute bread and butter business, dealing with their SME clients on the continent, financing their real economy trade finance. Unfortunately, the unintended consequences of global regulations coming out of principally Basel mean that not only is the financing of that African trade completely unprofitable for them, it's also, the regulations also compel them to buy government bonds in order to meet some of their other prudential regulatory obligations. And it just so happens that those government bonds return 15%, 15 to 20%, and the banks don't have to hold any capital, zero capital cost associated with that. So rather than doing the unprofitable trade finance, they always opt, and they should responsibly opt, to buy the government bonds. Unfortunately, that's what's causing the trade gap.
So what are the alternatives then?
So the alternatives are that we try and address that problem directly. And there are a number of global attempts and programs to address the trade gap globally in Southeast Asia as well as in Africa. Unfortunately, up to this point, they haven't really had an African voice at the table to explain, what's the context within Africa, what will work in Africa. And the temptation has been for these international parties to try and, not only impose regulation that's causing the gap, but also impose their solutions that may work fine in Asia, but they don't work in the African context. So, the solution is to drive real solutions that come from Africa, informed by Africans, and the reality on the continent.
So isn't this typically where development finance institutions would come into play? Given the fact that, banks, financial institutions are commercial entities with the mandate to make profit, and it appears that trade finance is less profitable than government bonds. So how do you justify looking into it in the first place?
So, the point is we need to work with those DFIs, right? The reality is that the root causes are extraneously imposed on Africa, and it's only fair and right that the solutions should be aided by multilaterals, DFIs, as you suggest, particularly as they're really the only entities that have the resources to actually do anything positive. The point is that we need to work together between the African banks, who are the only entities on the planet that can touch those African SMEs and give them finance, and international multilaterals, DFIs, who have the resources to actually make an impact on a problem of this scale and complexity.
And keyword being together, which makes me think of the AFCFTA, where we're basically creating a single market. How do you see this impacting the inflows towards trade finance?
So the AFCFTA is unquestionably an enormously positive force on the continent. And I've only got positive things to say about it. The thing that we must be careful of, though, is it's not a panacea for the trade gap, right? And there's a very simple reason for that. the trade gap comes from these SMEs not being able to get finance in the first place. The AFCFTA and the removal of tariffs and the freedom of movement of goods and individuals is certainly going to help those SMEs and those African merchants who already have trade finance, and it'll improve the economics of their businesses. The problem is it won't help those that haven't got the finance in the first place. We need to go to the root causes of the trade gap, as you would with any problem. You go to the root causes and you try and solve those.
Well, definitely a conversation that deserves more time and plugging into. But thank you so much for joining us today. That was George Wilson, Head of Institutional Trade Finance at Investec.